is a provision for refund of input paid on VAT on such damaged goods. So next amendments are amendments under Schedule 2 of Excise Duty Act. Schedule 2 of Excise Duty Act lists down the items on which excise duty is levied. So the first item on which there is a change is item 1A and 1B. So 1A and 1B, it relates to excise duty on cigarettes. So there is increase in the excise duty for cigarettes. There are two types of cigarettes. One is soft cap and one is hinge ring. So soft cap is basically those cigarettes whose covering are soft, like it is just covered with paper or something like that. And hinge lid are those cigarettes which have packing, which is hard packing, which is made of either cardboard or steel packing something. And for those, the rates of excise duty are for soft cap. If it is locally produced, locally manufactured, then the old rate was 55,000 per 1,000 sticks, and which has been increased to 65,000 per 1,000 sticks. And if it is imported, previous rate was 75,000 per 1,000 stick, which has been doubled now. So it is 150,000 per 1,000 sticks. And if the cigarette is hinge lid, if it is locally manufactured, then the excise rate, old rate was 80,000 per 1,000 sticks, which has been increased to 90,000 per 1,000 sticks. So imported, if it is imported, it is 100,000, and so the new rate is 200,000. It is doubled. So the purpose behind this increase, one is to increase the revenue for the government, as well as to discourage the smoking, as you can call it as a sin tax. You pay tax to doing sin. So, and also it is in line with the World Health Organization goals. Next amendment is on beer. There is substitution made under items 2B, where a beer which is made locally and contains constituent that is more than 75%, which is made through local item except for water. The old rate was 30% or 650. 30% or 650 shilling per liter, whichever is higher. It was the old rate, which now there has been increased to 30% or 900 shilling per liter, whichever is higher. You might see that there is no change in the ad valorem rate, that is the percentage, there is no change. But for fixed rate, there is a change from 650 per liter to 900 per liter. So, and this is to harmonize the excise rate on the local beer production. You will see in the next slide there is a change to remove the production, which was change to remove the excise duty on the beer, which is just made of barley and it is malted in Uganda. So that one is removed and it is covered here in this item. So the para 2C has been repealed, which talked about excise duty on beer which is produced purely from barleys and which is malted in Uganda. So it is removed and it is incorporated in the earlier one. Next amendment is in item 3A and 3C of second schedule. Item 3 talks about undenatured spirits. So undenatured spirit, it is a spirit which is in pure form and without any mixture of any other chemical which is unfit for human consumption. So this can be consumed, this one, because it is in pure form and undenatured spirit. So in this amendment, undenatured spirit, it has been divided based on the volume of alcohol. So if the undenatured spirit which is which has strength of more than 80% of alcohol, and it is locally produced, so there is no change in the rate. It is 60% or 1,500 shilling per liter, whichever is higher. It is same as it is in the new one as well. But there is a reduction in undenatured spirit with a strength less than 80%, and it is locally produced, so the ad valorem rate, that is the percentage, has been reduced in this case. So from 80% or 1,700 shilling per liter, whichever is higher, to it has been brought to 60% or 1,700 shilling per liter, whichever is higher. Next one is amendment is in item 5B of second schedule. Item 5B talks about excise on fruit juice and vegetable juice. So the excise duty levied is at 10% or 250 shilling per liter, whichever is higher. The rate is remains same, but the new amendment is to provide clarity on exemption. So if the manufacturer is making juice out of pulp, which is procured 50%, which is procured from 50%, whether it is locally procured or from the partnering state, so then it would be exempt. This means that if any pulp which is obtained from whole EAC region, that is the East African Community region, then there is no need for excise duty on production and production of this juice. It is exempt. Next amendment. It was first the Parliament had proposed an idea to increase excise duty on motor spirit and gas oil from the current rate is 1,550, which was proposed to be increased to 1,650, and for gas oil it is currently 1,230, which was proposed to be increased by 1,380. But this was withdrawn by government without even letting them to debate in the Parliament. So there is no change currently, but as it was repealed by the government, we had to discuss about it. So there is no increase in the fuel prices due to excise, as the fuel is a very price sensitive thing, and it would impact all the activities. So there is no changes yet on this amendment. Next is substitution under item 11, that is for plastics. So sacks and bags made of polymer, ethylene or any other plastics under HS code 9323.21 and 3923.29. So these products are chargeable to excise at 2.5% or USD 70 per ton, whichever is higher. But there is certain exemption given to vacuum packing bags for food, juice, tea, coffee, and also bag that directly used in manufacture of sanitary pads. So these are certain exemption for wherein there is wherein there is no excise duty even on packing material. So on plastic product, only those HS code which are specifically mentioned, that is 3923.21 and 3923.29 is chargeable to excise duty. So this amendment is to harmonize the definition of plastic as per the HS code and also the custom procedures. Certain air extensions have been also subject to interpretation as a polymer based on this amendment. With that, we are done with Excise Duty Act. Next is Stamp Duty Act. Under Stamp Duty Act, there are certain amendments brought under Schedule 2. Schedule 2 of Stamp Duty Act also lists down the also list down the instruments and things on which the stamp duty shall be levied. So first item of schedule 2 is item number 5, in which there is changes. I'm sure that most of you might have received email from URL last year saying that you are supposed to pay 15,000 on each and every agreement, and they were asking the taxpayer to pay 15,000 per agreement, even for employment, rent, all those things. So from this amendment, so the stamp duty on those agreements have been reduced to nil. There is nil, zero stamp duty. It was previously 15,000, and URA used to present it as a collecting tool. But the purpose of the stamp duty is to provide authentication of a document, and not to be used as a collecting tool. So with this purpose, with this amendment, there is a relief to the taxpayer and restore the stamp duties to purpose of verifying legal documents. Next amendment is under item 42, which talks about stamp duty on the mortgage deed. So now there is on this mortgage deed, the stamp duty rate is nil. So if I read, mortgage deed of total value, a mortgager who gives a power of attorney to collect rent or lease of the property. Mortgage is deemed to give possession within the meaning of the item. So on the mortgage, previously it was 0.5%. Now on the mortgage, the stamp duty rate is nil, and even the auxiliary and collateral security and other instrument, the stamp duty has been brought to nil. This is a welcome change and is in line with the excise duty on the loans as well. And the purpose is to harmonize the treatment of all related loans and documentation. The purpose is also to encourage the borrowing from the financial institution and remove the stamp duty, so that it does not become a barrier for access of a secured loan. So next is mortgage on the crop, and even this there is no stamp duty. The stamp duty rate has been nil, and it was previously 15,000, and the explanation is also in the same lines as the previous slide. Next act, it's a very small amendment, is Hides and Skin Export Duty Amendment Act 2025. There's only one amendment in this act. Previously, there was exemption for export duty for certain hides and skin. So with this amendment, there is repealment of section 2 subsection 3 and section 4 subsection 2 and schedule 2 of this act. So as I said previously, there was exemption, but from now onwards, from July 2025, all raw hides and skin exported from Uganda will attract export duty of USD $0.8 per kg. So there has been levy of export duty to discourage the export of hides and skin from Uganda. With this, we start with our last act, that is External Trade Act 2025. Amendments are there under few of the sections. There has been introduction of few sections, and there has been definition of few words in this act. So let us first begin with the first amendment to the act, that is under section 1. There is the inclusion of definition of home use. Previously, home use was used several times in the act, but there was no proper definition for the home use. So with this amendment, the effort is made to define home use, and home use means goods imported into country for local use, for free circulation, and do not include goods for re-export or goods in transit. Meaning, These are those goods on which all taxes have been paid, that is import duty, VAT and etc. has been paid, and can be sold or consumed locally without any custom requirements, restrictions, and these are not for re-export or transit through Uganda. So as I said, it was not clear before, so now it has been defined. Next amendment is amendment in section 3A and 3B. So you will see that there is insertion of 3A, infrastructure levy, but I think most of you might have heard this term infrastructure levy. This is not something new, but previously it was charged, but there was no proper section through which it was charged. So now from this amendment, through the insertion of this section 3A, it gives power for charging infrastructure levy. So infrastructure levy, it shall be charged on all goods imported into country for home use. The infrastructure levy, the rate is 1.5% of the custom value, and this is paid by importer at the time of entering goods in the country for home use. This section has certain exemption like the goods and products prescribed in 5th schedule of East African Community Customs Management Act 2004. Basically, it's a list of in the 5th schedule there are a list of items on which there is no infrastructure levy should be applied. So it basically covers essential items like agricultural input, fertilizers, etc. But it's a big list. We can check from the 5th schedule of the IACMA Act, and then exemption is given for plant and machinery prescribed under section 84 and 85 of East African Community Common External Trade Harmonized Commodity Description and Coding System. So those plant and machinery are majorly those plant and machinery which are used under industrial machinery. Those comes under industrial machinery, manufacturing equipment, etc. And next is goods under special operating framework with the government of Uganda specified in approved measures of import duty rates in East African Community Common External Tariff. So these includes goods imported under investment schemes, imported goods for government approved projects. So all those things, all those goods and products are exempted from infra levy, but majority of goods are covered for this infrastructure levy. So as I said, previously also this infrastructure levy was imposed. Therefore, there is nothing new on this. However, the question would under this would be that what law it was imposed previously. Section 3B, that is import fees declaration. So this is a new levy, and with this new levy, it has been new import declaration fees. This is the fees which is to be charged on all imports of all goods imported for home use, and it is 1% of the custom value, and it is paid by the importer at the time for clearing of home use. So, and it also has the same exception which we read just for infra levy as well. And this is an additional cost for the importer, and it would increase your cost of imports. Next and last amendment is amendment in section 4A. There is an insertion of section 4A immediately after section 4, and by this insertion there is imposition of export levy on wheat bran and cotton cake and maize bran. So if any tax, any person is exporting wheat bran, cotton cake, and maize bran from outside from Uganda. There is an export duty levy of USD 10 per metric ton, and this would be paid by the consigner to the URA at the time when the wheat, bran, cotton cake or maize has been consigned out of Uganda. So this is basically to discourage the export of these three items, as these three items majorly form part of the feeds for the animal industry. So if it is exported in large quantity, then it would create a scarcity in the local industry, which would in turn lead to increase in the prices of animal feeds and animal products. So with that we can conclude with our presentation. Thank you for your time, and if you have any question and answers, feel free to reach out. Thank you.
Thank you, Abhishek, for simplifying those amendments and helping us understand their practical impact. With various changes and amendments having across various sectors, we have come with a thought in mind. We are pleased to share also introducing corporate financing option for our clients, for which we have partnered with various banks, private equity firms, individual investors, and obviously our overseas arms, with both equity and debt solution. So whether you are expanding operations, entering into new markets, or simply strengthening your financial foundation, we are here to guide you through every step. Well, now let's begin with the most interesting session of question and answer. I'm sure our audience would be having questions with our expert panelists from our team. My team will assist you with the mic. Request you to kindly raise your hand for any questions. Just a moment.
First of all, I would like to thank bakertilly for having arranged such a wonderful event and very informative for us taxpayers. Thank you very much for it. Now there was one section where you say a company A and company B, if they are same directors and they form company C, they can transfer properties without any capital gain tax. That is from two companies to a third company.
That is to the third company, that is the company which is getting amalgamated, the new entity.
Yeah. But what my question is, that if a company sells an asset to the same director on individual basis, is there capital gain tax there?
So,
say for example, in a company A and B are the directors. Now the company sells the property to A and B. Is there capital gain tax?
yeah, so this rollover relief is available when there is two or more companies are getting amalgamate or merge, or at the group level, if the group level some of the entities are getting merged, then only it is available. But when there is a sale of assets from company to the individual director or shareholder, then capital gain tax will be applicable.
Good evening, everyone. Thank you for conducting this insightful seminar. My question is related to this section, income tax section 18. If we read together section 82, 83, 84 and 85 together on withholding tax on imported services or digital services basically. So now as per the new amendment it is 5% if you import a digital service from non-Ugandan company. Earlier it was 15%, as much as I know. So is it now a straight 5% for the companies, for the countries which Uganda has a treaty with, like some countries, for example South Africa, they have a treaty of 10% withholding tax. So would it, the same 5% will apply to the South African company, or it will remain, the treaty will remain at 10% with that country, or it will be a flat 5%?
So basically section 86 provides for the flat 5% of the taxes. So this is not a withholding tax, it is a tax which has been introduced because what happens like DSTV, okay, they provide digital services, okay, but they don't have any offices, they don't have any setup here, understand? So how do you get the tax out of them, understand? In such scenarios, section 86 comes into play, and those non-resident supplier of the services are subject to pay 5%. Now that by 5%, if it is DSTV is providing services in Uganda, they have to register here and then make sure that they pay this 5% here. So what you are saying is when there is a direct relationship or between the buyer and the seller. But now here, the consumer of these DSTV services are local households who are not registered for the taxes and anything here. So that's why how to get the tax out of such kind of services. That's why they have introduced this section 86.
Okay. So for the companies like IT Solutions company who are taking services from, let's say, India, to provide the service to their clients based in Uganda, a Ugandan company, IT solution company providing service to Ugandan company, but they are taking outsourcing from Indian company. So the 15% withholding tax will apply to that company. So that will remain, right? Along with the 18% VAT on imported services.
Reverse VAT, yes.
Reverse VAT. Thanks for that.
Yeah, thank you.
Anybody would like to have some questions? Or I think I have a few questions listed down from some customers.
Good evening and thank you bakertilly for all the information. I would just like to get more information on this new PIN number, whether it is applicable for all ones or only the one who will register now onwards.
So it has been mentioned in the Act that these provisions will not come into effect from 1st July. Ministry of Finance will prescribe the date from when it will be applicable. So let's wait for the that date from the Ministry of Finance.
Any more questions? Okay, I have some prepared.
Thank you, bakertilly, for the presentation. presentation. Mine is just to ask around withholding tax exemption on VAT and income tax. So on so many occasions we do finance clients who import in machinery, but you find these clients bring in this machinery to work on maybe their factories and all that, and then they do employ huge amounts of people. But then you'll find every other time they are paying withholding tax on some of these equipments, end up straining their cash flow. So I would like you to guide on eligibilities that would enable them qualify for these exemptions. Like what do they need to do as a business to qualify for an exemption, VAT withholding tax exemption? Thank you.
Thank you for your question. So you are asking about the criteria for withholding tax exemption for VAT and income tax purposes. Yeah. So the first criteria is that the company should be more than 3 years. Registered for more than 3 years. And if you are a small taxpayer, the contribution should be more than 50 million shilling under income tax, withholding, and income tax, PAY and VAT, not withholding. So under all those 3 taxes, so the contribution, the payment of taxes should be more than 50 million. So, but if you are in MTO or LTO, the URA has certain expectations from your end. So their targets depend on your performance, and based on that, they give you the target. And also you need to be compliant, like the directors should have been filing the returns, all the directors, and the remuneration which you have been showing to the directors should be in line to the market conditions, and then there should not be any liabilities in your ledger outstanding. There should not be any liabilities, and likewise. And if you are within 3 years, if you are incorporated company and that is less than 3 years of 3 years, so in that case there are few conditions. If you satisfy that one, then they shall treat it as a special case and they shall grant you exemption. In that case, the first criteria is you need to have an investment in plant and machinery to the tune of $150,000 US. So if you fulfill that criteria, so you can get the exemption based on that criteria, even if you are not within 3 years. Hope I have answered. Thank you.
Any more questions? Well, just for the clarity of everybody and for a better understanding, sir, I have noted down certain questions which I would need updates on. My first question will be, will penalty on understatement of provisional income for financial year 2023-24 will be waived under section 47B?
Yeah, so all the penalties and interest which are outstanding as on 30th June 2024 will qualify for this waiver, as long as you pay the principal tax before 30th June 2026.
Okay. Can a company use PRN instead of TIN as tax ID from 1st July?
So as we explained that the date for applicability of those provisions has not yet been prescribed by the finance minister. So let's wait for the update from the finance minister, and then we can see.
Okay, so that's a wait and watch session. The next question is, if risk penalty of twice of tax is per transaction or per month?
Yeah, so it will be per transaction. Previously it was per month, that is the penalty of 6 million shilling or 8 million shilling were per month, but with this new amendment it will be per transaction.
Oh, I hope this is an important change. Will there there be nil stamp duty on rent agreements and employment agreements?
Yeah, so as per the amendment, all the agreements and memorandum, there would be nil stamp duty.
Oh, that's great. Will import declaration fees of 1% be charged on goods which are exempted from import duty?
So in this amendment, even infra levy and import declaration fee would be charged on all imported goods. So even if there is no import duty on those goods, but there would be this infra levy and import declaration fee. So even if a manufacturer who is importing raw material, so he might see that there would not be any import duty. Import duty would be zero because of the exemption for the manufacturer, but he will have to pay a infra levy of 1.5% and the import declaration fee of 1%.
Okay, thanks. I hope that's clear with everyone. Any more questions to be asked? Alex?
Thank you, bakertilly, mine is on.
You're not audible.
Mine is on the UN-related agencies, the ability to claim the VAT, and I would like to know how far back can one claim that VAT, or is it effective only from first of July?
Can you please repeat the question?
Basically, he is trying to understand whether the UN agency which has been listed in this amendment, how far they can claim the input VAT, correct?
Yes.
Yeah, so basically, once you are in the list, only then you can claim the input VAT. So if it is applicable from 1st July 2025, you can claim from 1st July 2025.
So with this, I think we can conclude the event. As we conclude this formal session on behalf of bakertilly Uganda, I would like to express our heartfelt appreciation to all the speakers, panelists and each one of you present us during this evening presentation. Thank you for being part of this dialogue. We now invite you to join us for the dinner and networking. Let's continue the conversation in a relaxed setting. Thank you. Take care. The food is being served. Enjoy your meal. Thank you. Just one request, if we could have all the members, our clients, various representatives, our team members on the stage, if we can take a group photo, that will be heart conjoined. Request to please join us on the podium. bakertilly team, clients, please, all our business partners. The more the welcome.
Thank you.
Bakertilly. Well, before we part ways, we have also the live presentation recorded. We shall share you the digital link for the same. Thank you.
Gracias.